In today's video, I'm going to share with you how I plan to make $1 million using UPRO and TQQQ over the next 10 years in pure gains. And if you stick around until the end of the video, I'll share with you how I plan to make $1 million in dividends using Cornerstone, Defiance funds, and Yieldmax funds. It's not a get-rich-quick scheme. It's not going to happen overnight, but shouldn't investing have a long-term horizon of about 10 years since day trading statistically loses? So we earn over $150,000 in dividends per year at this channel, and we also get days gains potential. Okay, I don't care if I'm up or down, but being up 8,000 in a day on top of earning these dividends per year is always nice. Okay, getting both pure capital gains and dividends. Okay, living the FIRE lifestyle. If you need help doing the same, email me for my e-guides at aikandtodd48@gmail.com. FIRE stands for Financially Independent, Retire Early, of course. And you can see that my performance shows that this strategy of using margin, okay, everyone gets for $1, every $1 you put in your account, you get $4 of purchasing power, depending on who your broker is. And you can see that over a 3-year time frame, I'm up 47% for those 3 years, and the indexes are up half of that. Okay, and that's because I use margin and Cornerstone, and even UPRO and TQQQ, okay, that will help you get increased performance versus the indexes as well in a bull market. In a year-to-date time frame, you can see I'm up 21%, beating the S&P handily. Okay, we were at 50% just a couple of months ago. I always have to say this because that's the potential of using dividends with capital gains, with margin. If you play this all correctly, you can really outperform the market. But we had a rough month in October. Cornerstone was down, like many closed-end funds were down. So we gave back some of that performance, but we're still beating the S&P. And I hope we can catch up to the NASDAQ soon, once again, because we were beating all indexes before. So here's the first thing you need to know, okay? So first of all, again, yes, I use margin at this channel to get ahead. If you don't use loans, I don't know how you're going to get ahead. All the greats use loans to get ahead. And Elon Musk, I always say he bought Twitter on margin, okay? So if you learn how margin works and how debt works, you can really get ahead in life. And so you see, I just use a fraction of this purchasing power, this 1 million in purchasing power, okay? So my debt's around 146. So if I earn about 150,000 in dividends, then my debt can be gone in less than 1 year, okay? If I just close out all my drips, because I drip Cornerstone, as you know, and this is my largest fund here, Cornerstone. So my debt will be gone in less than a year, and so my leverage is gone in less than a year. And the first fund we're going to discuss today is UPRO, okay, because it's the index. As you can see, Cornerstone's a 5-star fund. Don't forget that. And it beats all the indexes, as you see here. Don't forget that, because now we're going into a different chart. We're going to show you UPRO over 10 years because you saw Cornerstone beats the indexes over 10 years, as you just saw on that chart there. But UPRO, okay, as you can see here, it made you around $200,000 over 10 years if you invested $10,000, okay? So if you combine UPRO with TQQQ, okay, TQQQ, which is the NASDAQ version, the triple leverage NASDAQ, UPRO is the triple leverage S&P version, TQQQ, it made you around $760,000 over the last 10 years, okay? So if you combine both of these funds, they make you about $1 million in capital gains. Okay, so here's how you have to play these funds, though. Okay, they take a few tricks to perfecting, I guess you can say. First of all, with these triple leverage ETFs, you have to watch the maintenance, and this is in my volume 3 margin e-guide. Okay, even if you're not using margin like I'm using, you want to watch your maintenance levels. So with TQQQ and UPRO, you'll see that if we go to a margin maintenance tab here, you'll see that they are 75% maintenance, and I alluded to this in the last video. So this is a big problem. Even if you're not using margin, this sucks up all your available withdrawal, and you can't withdraw freely out of your account. So if I put 100,000 in TQQQ, then 75,000 of my dollars are taken up. Okay, and you saw Cornerstone, which is a 5-star fund on Morningstar. Yeah, you remember that last chart I showed you. Cornerstone is only 30% maintenance. So that's how I live financially free, the FIRE lifestyle, financially independent, retire early, because I keep my available withdrawal high. All right, my available withdrawal staying high is very important. Okay, it's not really about this net account value number. That's just your ego. It's about this available withdrawal, 213,000. Okay, so this means I can withstand a 30% correction overnight and still withdraw freely from my account. Okay, even if you're not using margin, once again, then you don't have to worry about margin calls, but you can't withdraw freely. So I just keep my available withdrawal high enough so I can live both. I can not only, retire early, live the fire lifestyle, at 37, okay, but also I can withstand margin calls of over 30%. I could withstand a market correction of over 30%. And just in case we fall 30% in a night, okay, which is very rare, I have these put options on here, SPY and QQQ, to help neutralize the downside in my index plays. So I would really clean up on the downside and probably kind of get a sort of a break even net from those put options. Okay, so I keep those on at all times. Those are also in my margin volume 3 e-guide, how to hedge your portfolio against a crash when you're using margin. Okay, I don't really recommend you use those put options if you're not using margin, because put options lose over time. The S&P averages 7% per year, so you don't want to just be shorting the market every month. I do it just to sleep at night because health is very important and because I use margin. Now, I took off my put options recently because I don't have as much margin on now. My margin's laughable because my leverage will be gone in less than a year. So I don't really think I'm running too much leverage here. And I'm in safe place because they're all indexes generally. But you still, I thought the market had a big run recently. The market's had a snapback from its lows in October. So I thought it was a good time to add some cheap insurance, even though I'll probably lose on that. Okay, so the other trick with using these triple leverage ETFs, okay, is not only to watch the maintenance, which I just demonstrated. I just kind of showed you those maintenance levels and showed you if you need more help on those, those are in my volume 3 e-guide. When you buy all my e-guides, by the way, you get free access to Discord and my phone number for life. So you have to watch the maintenance levels in these triple leverage ETFs, but also you have to watch the decay, okay? So the way that I play the decay in these triple leverage ETFs is I keep them at positions of 10,000, as you can see here. Okay, UPRO 10,000 and TQQQ about 10,000. I plan to get that up to 10. I'm trying to buy it on any dip to get it to 10 and 10. And the reason why I do this is because you see that 10,000 can make you about $1 million if you're in both of these funds over the next 10 years, if future performance is indicative of past results. But they decay. So how do I play that against it? Well, in a down market, here's why I go with $10,000 positions in these funds. Not only does it make you a lot of money on the upside, but through position size management, they act as their own governors, okay, against a downturn. So if you had $100,000 in SPY, which traditional thinking tells you to do, then if you had a 50% correction in the market, you would lose 50 grand. And then you would still have 50 grand worth of pain to endure since there's a lot of steam left in those shares. But if you have 10,000 and 10,000 in these triples, then the most the market can do is, even if everything went to zero, which it wouldn't, or had a 50% correction, you'd only be down around 8K in each of these triple leverage ETFs. So you would lose a lot less than you would in SPY or QQQ. And then if the market were to continue lower, like I just said, you would have no steam left in these positions and they would barely hurt you. If you were left with 2,000 in these positions and then the market fell another 50% from there, you'd only lose 1,000. So I use the decay against it, okay? And when the market resumes its uptrend, which it inevitably will because the market averages 7% per year over time, then you just rebalance these triple leverage ETFs and get them back to 10K. It's better than rebalancing your 50K SPY position back to 50K so you can get it at 100, get it to 100 again. So you rebalance these back to 10 so you can get the full participation on the upside because you'll have your full position back in it. And that's how you can really make that million in these triple leverage ETFs, is when you buy them at the lows. All right, the next thing I do with these triple leverage ETFs, okay, and this is how I'm making $1 million in 10 years off of these, and I'm going to discuss how I do the $1 million in dividends next, okay? But the other thing I do with these triple leverage ETFs is not only do I put them at 10,000, do position size management, which I discussed in my both volume 3 and volume 4 e-guides. Position size management is key to your survival. Okay, the next thing that I do, and I just discussed how you let them act as their own governors going up and down these $10,000 positions. But also, I sell puts, okay? I sell put options on these triple leverage ETFs at the lows. So when the VIX spikes and the volatility is really high, that's when I sell a lot of these options, these index. I sell the options on these indexes, okay? So TNA, for example, it shows we're down 400, but look, these losses aren't really truly indicative of my true cost position, because if you take an IEP, for example, which just shows I'm down 1100 in, if you go 20 minus 4, which is 16, so here's the strike price for IEP, 20 minus 16, okay, minus 4. So that's my premium received and knock my margin down by $400. Okay, 20 minus 4 is 16, and IAP is higher than 16. So these losses in the options aren't really true, okay? Sometimes they take the midpoint pricing. They can be kind of strange, but if you just hold out, just sell the time and just let time go by, or if you have premiums that are high enough to lower your cost basis to below where they are in the market price, then this is your true risk upon assignment. So I would be up on, if I were to get assigned to IAP, I would be up in it. Same goes for TNA. I'm not really down a huge amount in this, because if you go 40 strike price minus $10 roughly, then you're at 30, and the stock price is at around $28 or something like that. So TNA is the Russell, and so I didn't sell any more puts on this because I have more Russell exposure through OARK, all right, and because it has some small caps, and I'm getting the qualifying income from OARK, and this not only pays my bills, but it gives me qualifying income to banks. Because again, when you use UPRO and TQQQ, they're great, but I tried using that for a loan once to a bank to get a house, and he would not accept that because you can't rely on capital gains. So he would only take dividends or pay stubs from a job, and that was my big aha moment in life. So I had to switch to dividends, but they had to be indexed, so I switched to Cornerstone. And Cornerstone, as you know, 5-star fund, I already showed you that. But the advantage of Cornerstone is it drips its dividends down to the NAV, the 21% dividend, and drips it at the NAV, okay? And you really can't find another fund that does that, okay? Cornerstone, this is one big method of how I'm getting my million back in dividends, because I earn about 100,000 from Cornerstone alone. So in 10 years, that's $1 million in dividends. But 5-star fund beats the indexes. You have to factor back in the drips and the dividends and the ROs. You have to play the RO correctly, the rights offering in Cornerstone. That's why a lot of people complain about Cornerstone. They either can't get the special drip going because they don't have the right broker that will offer that special drip, or because they don't want to play that rights offering. But would you rather be told when to sell, like Cornerstone does? It tells you when to sell for its rights offering, which I alert you of on Discord here. That's why we started Discord. It has over 500 members in it now. And we did this, I started this just for the Cornerstone announcement, okay? A lot of people wanted to learn how to play Cornerstone properly. They bought my e-guides, and or they wanted to use margin properly, but they still wanted Cornerstone to be one of their major vehicles. So they were asking next, well, when does the rights offering occur? Okay, well, the rights offering occurs, you have to watch certain thresholds, certain premium levels, which I comment on in my volume 4 e-guide. Okay, and but they still wanted the alert service, so I put my portfolio on Discord now. You can track it there, and we have the rights offering announcement for Cornerstone on Discord, okay? So we have over, again, 500 members there that will alert you of that if I don't already. We also have an RSS feed that the admin so kindly put in. Gaines and Hash and Ray, these guys work really hard to get an RSS feed for Cornerstone rights offering announcements. We get it automatically in Discord, which is really cool. I never would have dreamed of that. I was just going to do it manually and tell you guys myself when the rights offering occurs. I was going to notify you on Discord. And so when you buy all my e-guides, you get free Discord access, again, for life, and you get my phone number, okay? So I can walk you through whatever you need me to walk you through in your portfolio. I can help you negotiate down your margin rates if you have ability to negotiate them down, usually it takes certain requirements that we go over on the phone. We could talk about anything, strategies, hedging options, whatever. Okay, so I'm here for you if you ever need me. I love this stuff, and I'll talk to you till I'm blue in the face. Ask any of my clients who call me. All right, so Cornerstone, that's how I'm doing the 10 million, the million in 10 years is through its dividend program, which again, you just have to play that properly through the rights offering. Because everyone will say, well, the dividend goes down each year. Yes, but you have to play the rights offering properly each year, sell your shares before it, reload after, and that's how you get more shares and you avoid that downside pain from the rights offering. Many closed-end funds have rights offerings, and Cornerstone is no different. So, you know, if you're doing the triple leverage ETFs, be aware of the decay, but use the decay against it, okay? Let that take the steam out of the shares for you, all right? And then rebalance at the lows when you see trend reversals happening. I have a volume 2 e-guide on technicals, and that's how I use the trends to reverse. Usually, I mean, I covered the shorts in Cornerstone right at the lows, and I've timed UPRO and TQQQ pretty well at the lows too, because I just use a combination of technical indicators that help me narrow in, focus in on where to make those buys at. Okay, so that's in my volume 2 e-guide. And so when you're buying these triple leverage ETFs, watch out for the decay, let those work for you, okay, and then rebalance at the lows. Sell the puts on these triples at the lows as well. When the VIX spikes and you hit around 40, that's when you really want to sell puts on these triple leverage ETFs. But be aware of the decay there and be aware of the maintenance. Okay, the maintenance is in these funds. Whether you sell puts on them or you buy them outright, you have to watch the maintenance. Okay, and because that sucks up all your available withdrawal. Okay, so it might lower your margin, but your available withdrawal is lower now. So make sure that you use an optimal amount of puts if you sell them on these funds, and you buy an optimal position size amount, which I think is around $10,000, but it depends on your account size, okay? And then for the dividends, Cornerstone, also Yieldmax and Defiance, but I manage these position sizes differently. Like I have less than Yieldmax because those are unproven, but they've been working very well for me. And then I have like the Yieldmax funds, but I keep them at around 1,500 as you can see here, because they're stock specific. I don't want headline risk to ruin me in these stocks. So that's why I keep the bulk of my money in the indexes, primarily Cornerstone and Defiance. And then I watch my position size. I manage the position size in these Yieldmax funds, keep them around 1,500, again, to eliminate headline risk and avoid those surprises. So that'll do it for the video, guys. If you like the video, click like, subscribe. And if you need help doing what I'm doing, living the FIRE lifestyle, email me for my e-guides at aikentod48@gmail.com. Thanks.